Hey guys, what's going on? Jeb here, and in today's video, we are going to be diving into stock to flow and how it relates to Bitcoin and the bull market that we are entering. In today's video, we're going to be discussing stock to flow from a historical standpoint, and we'll also dive into some of the untenable price predictions that the stock to flow model has posed for Bitcoin. However, we're also going to be talking about the hard money concept of Bitcoin, how stock to flow isn't invalidated like some people have said it is, and what it means for the future of Bitcoin. Guys, this is a very important video, one that you're going to get a lot of value out of, because in today's video you're going to be learning about stock to flow, what it is, how it applies to Bitcoin, and at the end of the day, how it applies to you. All that said, guys, I hope you enjoyed today's video. If you do, as always, consider hitting that like and subscribe button down below. But without much further ado, let's go ahead and dive right on into it. Today's video is sponsored by our very own CT2A. For those of you who aren't aware of CT2A, it's the course that we've created specifically with the intention of teaching you guys how to trade, invest, and profit in Bitcoin. Sign up with the link in the description down below and get started learning to trade Bitcoin today. We're going to start today's video with my messy hair. So to start today's video, we're going to be jumping in with a historical perspective on what stock to flow is, because there's a misconception in cryptocurrency that it only applies to Bitcoin, but in fact, you can use the stock to flow ratio to analyze the salability, something we'll get to in a minute, of any currency throughout the history of humanity. In this video, we're going to be starting by diving into a historical perspective on what stock to flow is. For those of you who are not familiar with stock to flow, here are the basics. Stock to flow at its core is a quantitative means of analyzing the relationship between the amount of a commodity in existence to the amount of a commodity being produced. In layman's terms, this simply means that the stock to flow number, the stock to flow ratio, represents how many years it would take for the current flow of that commodity, the creation rate of that commodity, to replace the amount of that commodity in existence. So if the stock to flow ratio is 1, that means it would take 1 year to replace all of the corn in existence with corn being produced. But stock to flow is also very useful in terms of currency. Gold stock to flow ratio, for example, is about 66, which means it would take 66 years at current production rates to replace all of the gold in existence. As you can see by this chart, there's about 3,300 metric tons of gold being produced every year, which is a lot. But how does that apply to currencies, and more specifically, how does this apply and even matter in the slightest to Bitcoin? Well, I think the place that we need to look is into history, specifically the history of West Africa with agri-beads. You probably know the story. European explorers start sailing south from Europe. They run into the big old continent of Africa and start taking advantage of it. But history books don't really explain how that ended up happening in the first place. It's a very complex bit of history, and part of it actually has to do with currency hyperinflation and the stock to flow ratio. You see, in West Africa, there was a currency being used called agri-beads. They were essentially just little glass beads that were not produced in the region, and that's important. These glass beads were most likely produced in Palestine and other parts of the world. Glass making was not widespread in West Africa, meaning that the stock of glass beads in existence being used as currency could not be replaced. So in theory, it had an infinite stock to flow ratio, meaning that it was a hard currency, meaning that it could not be hyperinflated. You may see how this is tying into Bitcoin now. Now, the lack of glass-making technology was not the same problem in Europe as glass-making was widespread. So what the Europeans did, and in fact, this is something else that Safadine Amos talks about in the Bitcoin Standard, specifically on pages 13 and 14, the Europeans would create these glass beads, laden down their ships with them, and then sail to West Africa, use them as currency, and buy up all the resources in the region. It's actually how the colonization and the conquest of the African continent started, was through the hyperinflation of a currency because the stock to flow ratio was compromised. You can trace most of what happened to the African continent starting around the 16th century back to hyperinflation. This is why Bitcoin's so important, and this is why stock to flow is so important, because stock to flow describes the problem that happened. The agri-beads were hyperinflated because the Europeans were bringing in new stock, increasing the flow, dropping the stock to flow ratio, meaning that the agri-beads were being recreated, and the people that lived there lost their value because all of a sudden, instead of, say, there's 100 million agri-beads in existence, there's a trillion. You cannot create money out of thin air. So all of those people that were storing their wealth in agri-beads lost it. It's very sad. So why is this so important? It's because an inflationary event that happened in West Africa led to the slave trade. In the same way, we see things happening in the modern world that harken back to this tragic event. For example, the Venezuelan bolivar being hyperinflated. For example, the currency in Zimbabwe being hyperinflated. For example, the currency in Weimar Germany post-World War I being hyperinflated because the Germans were trying to print money out of thin air to pay back debts that they were being levied from the Treaty of Versailles because of the First World War. In every single one of these four instances, Venezuela, Zimbabwe, Germany, and West Africa, hyperinflation occurred, because of an unstable currency that had its stock to flow crashed, which led to people losing their wealth and therefore being put into poverty. And by the way, when you're put into poverty, you don't have the ability to protect yourself, so social injustice started as a result. So if you still don't get where I'm going with this, you might be wondering, Jeb, how does this tie into Bitcoin? I thought you were a Bitcoin channel, not some statistic nerd. I am a bit of a statistics nerd, but at the end of the day, we do actually have a point to be made here. The reason this is a big deal is because two of the biggest selling points of Bitcoin prevent what happened in those four examples. Number one, Bitcoin's decentralized, meaning that we have control of what Bitcoin does, not a central authority. In the West African example, the Europeans were that central authority. In Venezuela's example, the Venezuelan government was the central authority. In the German example, the German government and the Entente powers who levied those reparations on Germany were the central authority that caused that chaos. Bitcoin is decentralized, meaning that the same thing cannot physically happen without altering the entire blockchain, something near impossible to do. And the second reason, and the reason that really ties into this video, is because Bitcoin is a finite currency. And what that means is that Bitcoin is something called hard money. See what I did there? I'm talking to myself in editing. That was a cool edit, huh? Getting fancy. And listen, guys, I want to be very clear because there was some disruption a few months ago about stock to flow ratio in Bitcoin being invalidated or being busted or whatever. Look, okay, so there's a distinction here that you need to be very aware of, and that is stock to flow as a concept is as solid today as it ever was. It measures something called the hardness of money, which is a very important component of the salability of money, that being its ability to be used over time, space, and I'm forgetting one of them, scale. That's salability. If a currency is going to be inflated in the future, it's not saleable over time because you can't store your money in it and it stay worth what it already was. That core concept of stock to flow and how important it is has not and will never be invalidated. What was invalidated were the price predictions that stock to flow was being used for to predict on Bitcoin. Stock to flow is predicting multi-billion-dollar valuations for Bitcoin in the future. And by the way, if the US dollar hyperinflates, that's possible, but it doesn't mean what it might look on the surface, because no, Bitcoin is not going to go to $20 billion a coin based on today's dollar. If the dollar gets hyperinflated, then maybe it will. But stock to flow as a concept is very important for our understanding of Bitcoin because the stock to flow ratio on Bitcoin just went up through the halving event that we saw this year. Just because the stock to flow price predictions are pretty much completely unreasonable for Bitcoin, especially the ones starting two halvings from now, seeing 10 million, 100 million, billion dollar Bitcoin price valuations, stock to flow is still actually very important to Bitcoin. Look at the inflation of the United States dollar. Why is the United States dollar inflating? Simply put, it's because the stock to flow ratio is dropping because more dollars are being created. As I mentioned in Monday's video, you may have heard the statistic that 22% of all US dollars in existence have been created this year. Call it 20% for easy math. That puts the US dollar stock to flow ratio at 5. Bitcoin's after this halving is 50. Remember, that number represents how many years it would take at the current flow to replace the current stock. It's the stock to flow ratio. If this trend in the United States dollar continues of our federal government, the United States government, printing dollars on dollars on dollars on dollars and saying dollar bills, y'all, we're just going to print money into oblivion. If that continues, the United States dollar is doomed to fail, and anyone storing their money in it will lose their money. That money will be transferred from their ownership to ownership of the central government, who is going to benefit from it, and from the people, us, who are holding Bitcoin as a hedge against an inflationary currency like the US dollar. And for those of you who are in other countries, don't think you're safe either, because every other currency on the planet is backed by the United States dollar. If the dollar goes down, the entire world currency goes down. And look, guys, this isn't the kind of thing that would happen over the course of 6 months. This would be transitional. This would likely take decades to occur. It's not something that's just going to cause a 2012 style apocalypse. It's the kind of thing that is going to be a slow burn, and it's going to hurt very dearly for those who put their faith in fiat currencies. Now, by the way, I don't want to scare people. This could happen 50, 100 years from now. I'm not talking about this happening overnight, but this is something that we need to pay attention to. There's a reason that the United States dollar has lost 98% of its value over the last 150 years. It's because we went off the gold standard, we got the stock to flow ratio too high, and we started printing money too happily. This is quite literally the key to the future of Bitcoin. Because of the halving event that happened this year, the stock-to-flow ratio on Bitcoin has nearly doubled. The reason, again, so that you understand the stock-to-flow ratio has doubled is because the supply rate has been cut in half. It's simple mathematics. Bitcoin, like gold, is a form of finite currency. It's a hard currency. It's hard money because it's hard to create it. It's hard to inflate it. In the same way that gold has only ever seen, at maximum over the last 70 years, 2.5% inflation year over year, because, quite frankly, it's hard to mine gold. It's just as hard to mine Bitcoin. The error that the stock-to-flow price predictions for Bitcoin makes is assuming that stock-to-flow going up will have a linear relationship with price action going up on Bitcoin. Of course, the price is going to plateau at some point, but it does mean that Bitcoin is a much more stable, much more secure, and at the end of the day, much more saleable form of currency than the US dollar is, it ever will be, and it's the place that you want to store your wealth if you really believe in the future of blockchain. Of course, that's not financial advice, it is just my opinion, so don't sue me, don't hate on me in the comment section, but do let me know in the comment section down below what you thought of today's video. Listen guys, the point of this video is not to instill fear in you, it is not to make you just go burn all your Benjamins in the backyard, it is not to do that, it's not to scare you, it's really not, it's to make sure you guys are informed on why Bitcoin is so much more safe to keep your wealth in than the US dollar ever will be. You know, guys, this has been a really this has been a very hard 2 months since we moved into the office. I apologize that we've missed so many videos. And one of the things I've been thinking about lately is how I want to teach people. And one of the things I want to make sure that you guys always do is ask the question why. The question why can change the world. It's really incredible. The question why has led to all of science is built on the question why. All of actual journalism is built on the question why. Everything that humans have ever done, good or bad, has been built on the back of the question why. So I want to make sure that we're asking the same question why when we put our faith in Bitcoin. Why do we put our faith in Bitcoin? Why do we believe that Bitcoin is the future? Why do we believe that Bitcoin will be mass adopted? Why do we believe that Bitcoin can lift hundreds of millions of people out of poverty? It's quite simple, really. The reason why is because Bitcoin has a hard cap. It cannot be inflated. It cannot be controlled. And it cannot be corrupted. For the first time in the history of mankind, we have a currency at our fingertips that cannot be tampered with. That has never happened, and if you study history from a currency and economics point of view, you see that most of the problems that have ever happened in this world happened because of a currency crisis. The fall of the Roman Empire, for example, currency crisis. Pretty much every single time China broke up, currency crisis. The West African slave trade and everything that's happened in the last 400 years having to do with racism goes back to the West Africans being taken advantage of through the use of a currency crisis. And make no mistake, history does repeat itself. There will be future currency crises, but hopefully, if we do things right, we can stop them once and for all with Bitcoin. So guys, that is going to wrap it out for today's video. Before I go though, I do just first want to mention the Cryptocurrency Technical Analysis Academy, because as you guys know, CT2A is the one-stop shop for learning everything you need to know about trading, investing, and profiting in the cryptocurrency markets. It's the academy that we created. It's been live for over 2 years, and it's helped thousands of students learn how to work in these markets. You guys are telling me all the time about how much value you've gotten out of CT2A, and guys, I'm not going to tell you a lot just yet, but over the last month or so, we've been working on some really big updates for those of you who are already in the academy. I encourage you to join because you're going to be getting front row seating for all of those things. Wink, wink. We'll be talking about that in the future. Guys, I'm really excited about where the channel's going. I really, seriously, from the bottom of my heart, appreciate you guys hanging in there with us over the last 2 months because the videos have been all over the place. We've missed so many days. Quality's been up, down, sideways, back, forth, purple, blue. It's been nuts. I appreciate it, guys. I really do. I'm going off script here a little bit. Thank you so much. It's been a hard 2 months, but we're getting there. We got this. We're solid. Something awesome's coming Friday. Subscribe for that. If you haven't already, hit the post notification bell. Make sure you like the video. Leave a comment down below. Tell us what you thought. What do you think about the stock-to-flow price predictions on Bitcoin, and where do you think cryptocurrency at large is heading? Are you investing in Ethereum pre-2.0 launch? Tell me what you are thinking in the comment section down below. But before I go, guys, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace. Oh, I got a real good feeling.